Alright, so welcome to lesson 2, the EMA Bounce strategy. So this is one of the first advanced trading techniques that you'll be learning in this course. So this strategy basically profits from the fact that when a currency pair is on a very strong trend, it tends to bounce off its moving averages. Now it doesn't happen all the time, but when it does, the price action is extremely reliable. So for example, we seek to go long on FX pairs, or we buy currency pairs on a strong uptrend as they bounce off their 50 exponential moving average support. So if you take a look at the chart on the left, you can see that when it's on a very clear uptrend, it would at times bounce off the 50 moving average and find strong support at the 50 moving average. So when we see that pattern recurring, we take advantage by buying right as it bounces off the 50 moving average, and we exit as it makes a new high. At the same time, we go short or we sell FX pairs on a very clear downtrend as they bounce off the 50 EMA resistance. So as you can see from this chart, on a very clear downtrend, at times it would find very clear resistance at the 50 moving average. We'll come back down again, 50 moving average, come back down again. As it goes up there, we'll sell short in order to profit as it makes a new low from that resistance. Again, as you observe currency pairs on trends, they don't always bounce off their moving average, but when they do, it becomes extremely reliable and tradable. So time frames for this strategy, I tend to trade it on the 15-minute time frame. We get an average of 10 to 15 trades a month, average win rate of 50 to 60%, and I look for a risk to return ratio for this strategy of 1 to 2. So in other words, I'm risking 1 hour to make at least 2 hours or more. This applies to all FX pairs, and once again, it works best when you use brokers with very tight spreads, maximum of 1 to 2 pip spreads. So let's go into the nuts and bolts of it and learn the entry rules. So let's begin with the long setup entry rules. When do we go long? When do we buy? We buy, obviously, when we see a clear uptrend in the price action. So how do we define a clear uptrend for an FX pair? So once again, we define an uptrend as the price has to be above the 18 EMA, 18 EMA above the 50 EMA, and the 50 EMA above the 200 simple moving average. So we need to have that moving average sequence in place to tell us it's a very strong uptrend. So the high, there's a very high probability that price will continue moving up. Next, when do we buy? We buy when it bounces off the 50 moving average, the 50 EMA. But how can we be sure that that 50 EMA is going to be a support, is going to be a strong support? Well, we want to ensure that the 50 EMA has been tested at least once to be a strong support. So we want to see that in recent price history, the 50 EMA has been tested before. So in this case, you can see the price is coming down like so and hitting that blue line. So that blue line is the 50 moving average, 50 EMA, okay? So the moment it reaches at 50, I'm going to do an immediate buy at this point. So how do I know that the 50 is going to hold? Well, I want to ensure that recently that 50 moving average has been tested with strong support before. So in this illustration, you can see that over here, the 50 was tested here. So this tells me that this has a greater likelihood of being a support level. Again, it could be tested here as well, all right? So I just want it to be tested recently. That's the point. So again, I'm looking at the 15-minute candles, ensuring that it's on a very clear uptrend, bouncing off the 50 EMA. But like most of my other strategies, I also have to check the higher time frame. In other words, after looking at the 50-minute candles, I have to look at the hourly candles, and to also ensure that the hourly candles are on an uptrend as well. So again, on the hourly candles, the hourly price must be above the 18 EMA, 18 above 50, 50 above 200 simple moving average. Okay, so it's got to meet all these criteria strictly. Next, very important criteria. I must see a very clear uptrend wave pattern. What does that mean? An uptrend wave pattern means higher highs and higher lows. Recall, an uptrend is always about higher highs and higher lows. So if you take a look at an uptrend, again, always remember that it needs to have a wave pattern like so. Breathe out, breathe in, breathe out, breathe in, breathe out, breathe in, and continues. Okay? So on an uptrend, these are what we call the swing highs. What I'm circling, right? So again, on this illustration, this is the swing high, that's a swing high. Got it? Okay. At the same time, these are the swing lows, swing lows, swing lows, right? So this is a swing low, that's a swing low, that's a swing low. Okay. Now, for this particular strategy, I'm buying at the recent swing low over here. This is a recent swing low, which is again bouncing off the 50 exponential moving average. Now, I want to ensure that we have the recent swing high higher than the previous swing high. So that's the first rule. What do I mean? So if I'm buying over here, okay, at this point, which is the recent swing high? Well, it's this one. That's a recent swing high, the most recent high, right? And the previous swing high would be the high before that, which is this one. Okay, so I must always ensure that the recent swing high is higher than the previous swing high, hence creating this upward wave pattern. Does it make sense? Very important. Okay, so let's call this A, for example. So A has to be higher than B. If it is not a valid trade. Okay, next, I want to ensure that the recent swing low is also higher or equal to the previous swing low. All right. So let me illustrate that. So which one is the recent swing low? Can you tell me? That's right. This is the recent swing low. Okay, the recent swing low. So the recent swing low is the point that we enter, that we buy. And I always ensure that the recent swing low is higher than the previous swing low. So which is the previous swing low? This is the one. This is the previous swing low, right? The low before this low. Okay. So again, this must be the wave pattern I see. Higher highs, higher lows. So if I call this C and I call this D, D must be higher than C, or D must be equal to C. So C and D could be the same level, and that's fine. Okay. But C cannot be higher than D. No. Okay. C cannot be higher than D. D must be higher than C or equal to C. Got it? Next, ideally, the 50 moving average should also coincide with a horizontal support level or a Fibonacci level of 50% or 61.8%. Now, point number 5, it is not a must. It is a good to have. It's a very high probability trade. But if I do not have that, I may still enter the trade. So again, what do I mean by that? So let me explain what I mean. Okay, so remember the previous lesson where I talked about Fibonacci levels. So Fibonacci is when we have an A. So there's an A to B, right? So A to B is the impulsive wave, right? The wave in line with the trend. And B to C is the corrective wave, okay? So remember that when I have an A to B and C retraces to the 50% level or retraces to the 61.8% level, that is a very strong support as well, okay? So what I'm saying is that if this 50 moving average support coincides with the 50 or 61.8% level, that's even better. Okay, so I tend to look for that as well. If it's present, it gives me more confidence to take that trade. Right? or the 50 moving average support coincides with a horizontal support level. So what do I mean by this? Let me illustrate by a drawing, okay? So in other words, it goes up, comes down, goes up, comes down. Okay, and this happens to be, for example, the 50 moving average. So does this meet the criteria? Okay, so this is the recent swing high, that's the previous swing high, right? So like I said, the recent swing high must be higher than the previous swing high, right? That's one of the rules. Next, then this is the recent swing low where we are going to buy. And that recent swing low must be higher or equal to the previous swing low, which is this one. Okay. Now notice that this happens to be a level of support. Okay, because it support goes up, support. Can you see? Okay, and of course, if it was like that as well, that would be even stronger. Okay. So in this case, you can see that the 50 moving average, where it is bouncing, it is also coinciding with a support level. And again, that gives me additional confluence or confidence that that's the support. It's going to bounce higher than that, right? So these are the specific long setup rules for the EMA bounce. So let's now take a look at the specific entry and exit and take profit points. So once I see this specific setup, where again the recent swing high is higher than the previous swing high, I see the 50 moving average tested recently to be a strong support. Could be tested here, could be tested here, doesn't matter. Once I see that, I'm ready to place my buy order. So for this strategy, my buy order, my entry would be a buy limit order placed at the 50 moving average support. So in other words, I see the price is currently at a swing high, it's coming down, coming down, coming down. So what I do is I look at where the 50 moving average is, and I place my buy limit order right at that 50 EMA. And again, this would be the recent swing low that we anticipate will happen before the price goes higher. So again, bear in mind that this is different from the other two strategies I've taught you in the basic Forex course. For the impulse pullback and impulse pin bar strategy, recall that we use a buy stop order when we are going long. In other words, a buy stop order is when we buy higher than the current market price. We buy only if the price reaches a certain level and triggers the buy order. That was for the first two strategies. For this particular strategy, I'm using instead not a buy stop order, using a buy limit order. So again, remember that a buy limit order tells the broker that you only buy below the current market price. So right now, the current market price is somewhere here. It's going down, right? So I do not want to buy it yet. I want to buy only when it reaches the 50 moving average. Right exactly at that point, I want to buy before the bounce. Okay, so I want to put the buy order there, and again, it'll be a buy limit order right at that point. Okay. So as I place that buy order, that's my entry price, I would simultaneously place my stop loss, which is a sell stop order, at least 8 pips below the entry price. So if my entry price is here, okay, at, for example, 1.2850, for example, okay, so my stop loss would be 8 pips below that, at least 8 pips. So could it be more than 8 pips? Yeah, it could be 10, it could be 20, it could be 30 pips. It doesn't matter, but at least 8 pips, okay? So if I put it 8 pips below, that would be a stop loss of 1.2842, right? So bear in mind, at least 8 pips for most pairs, but for pound-related pairs, like pound USD or pound yen, we use at least 12 pips because those pairs tend to be a bit more volatile. Okay. Next, the stop loss distance is the distance from your entry price to your stop loss price, which is from 2850 to 2842. That distance is known as the 1 hour distance as usual, right? That's our total risk per trade for this particular trade, okay? Now, why is that important? Because we will place our target price 2 times our risk, okay? So if our risk is 8 pips, our target price will be 16 pips above the entry price. If our 1 hour is 10 pips, our target price will be 20 pips above the entry price. So in this case, because 1 hour is 8 pips, 2 hour would be 16 pips, that's right, okay? So our target price will be 2850 plus 16 will be 1.2866 in this case. Got it? Okay. Now, what is really important is to ensure that wherever our target price is, it should be below the recent swing high, okay? Because if our target price is above the recent swing high, it's a bit harder to reach. But if it is below the recent swing high, it is more likely to reach that target price. Just in case that recent swing high acts as a resistance level, we can get out before it hits resistance, okay? As usual for any other strategy, we ensure that we check Forex Factory, the daily calendar of events, to ensure that there are no red news that could move the price violently in one direction, okay? So no major news release within the next 10 candles or the next 150 minutes. If there is, we avoid taking the trade, all right? Now, there are a few more things I'd like to mention about this particular strategy in placing orders, which is this. So again, I mentioned that the stop loss should be at least 8 to 12 pips away. It doesn't have to be 8 or 12, it could be more than that, right? So in fact, your 1 hour could be as wide as 20 pips, okay? But you have to ensure that if 1 hour is 20 pips, your target price must be 40 pips above the entry price. And as long as the target price is below the recent swing high, that's fine, okay? But it cannot be above the recent swing high. So the problem is that if you put your stop loss too far away, if it's too far away, your 1 hour is too big, too wide, your 2 hour would be very wide as well. And it may not be able to be reached within that recent swing high. So you have to balance to ensure that your stop loss distance and your profit target distance is within that recent swing high, okay? The other thing is that if I'm able to place my stop loss below the previous swing low, that would be ideal as well. Now, I can't always do that, right? But if I can, I would rather place my stop loss below the below the previous swing low, okay? That would be safer. So if I have to widen my stop loss by a few pips just to place it below the previous swing low, I'll do that. But again, if I do that, I have to ensure that I can hit 2 hour before reaching the recent swing high. So let me just illustrate that in case you didn't really get that, okay? So let me just draw an example. So let's imagine that this is the 50 moving average going up, and say it bounces over here, okay? And then it bounces over here like that, okay? So in this case, this is the recent swing high, and that's the previous swing high, right? So recent swing high must be above previous swing high, so that's okay, yeah? Next, our recent swing low must be above the previous swing low, right? Check, okay, good. Now, I'm gonna buy right here, right? That's my buy point, right at that 50 moving average. Can you see that? Okay. So if I can place my stop loss here, which is below the previous swing low, that would be ideal. Okay. But if I do that, I have to ensure that this 1 hour, whatever it may be, it could be 8 pips, 10 pips, 15 pips. If I double it to 2 hour, that's my profit target, right? So I must be able to hit my profit target or rather my profit target must be lower than this recent swing high. Okay, does this make sense? Okay, so, but if, for example, I have a case like that, okay, say it bounces over here, goes up there, comes down, bounce, okay? So in this case, I would buy over there, right? That's my buy point. So again, recall that my buy point is right at the 50 moving average, right there, okay? Now, in this case, where is the previous swing low? It is here, which is very far away, okay? So in this case, could I put my stop loss below the previous swing low? Could I put a stop loss here? Below that. Could I do that? No, it's going to be difficult, right? Because it's too far away. And if I put my stop loss over here, guess what? This would be my 1 hour distance, which is, again, too big. So if that's 1 hour, where's 2 hour? Right? 2 hour would be somewhere there. Okay? Which would be very difficult to reach 2 hour because it is above the recent swing high. Okay, do you follow? But if this point was nearer and I could put my stop loss below that, that would be ideal. All right, so these are just some distinctions that you want to look out for when placing your orders for this trade. So let's take a look at a few charts and you tell me if these are valid long setups for the bounce, okay? So in this particular case, we are looking at the 50-minute candles, and this is the pound franc, and you can see over here, right, it's going down and it's hitting the 50 moving average at 3262, okay? So my question to you is this: would this be a valid buy, valid entry for going long? We buy here. So before I tell you the answer, take a minute and think about it. Does it meet the entry rules? Okay. Pause the video if you want to take some more time to think. Yeah. Okay. So is it a valid entry? The answer is yes. It's a valid entry. Why? Because where's the recent swing high? This one, right? So this is the recent swing high, right? Where's the previous swing high? This one. That's the previous swing high. So what's the first rule for the uptrend wave pattern? The recent swing high must be above the previous swing high, making higher highs. Does it meet the rule? Yes, so it is valid. Good. Next. This recent swing low, which happens to be our buy point at the 50 moving average, must be higher or equal to the previous swing low. So where's the previous swing low? It's here. This is the previous swing low. Okay, so is this higher than this? Yes. So higher highs, higher lows, yes. It's an uptrend wave pattern. It matches the strategy. Okay. Next, also notice that the 50 moving average has been tested to be a strong support recently. So this gives us confidence that this will also be a strong support. Okay, so it meets all the criteria. That is a go for this particular setup. How about this one? Is this a valid bounce long setup? So again, you can see the price going down, and again hitting the 50 moving average. The 50 moving average, as you can see, was tested to be strong, So would you buy here? Would you place a buy order right there? So it triggers your buy order and it goes back up. Would you do it? Again, take a minute and think about it. Does it meet our entry rules? Okay, ready, go. Have you thought about it? All right, please do. Please make an opinion or have an opinion before I give you the answer. Okay, and the answer should be no. It is not a valid trade. Why? Because there's no clear uptrend wave pattern. Where's your recent swing high? There. This is your recent swing high. Where's your previous swing high? This one. This is your previous swing high. So you can see that your recent swing high is not higher than your previous swing high. In fact, this swing high is lower than this swing high, which is lower than this swing high, lower than the swing high. So it's making lower highs. So this tells you that the uptrend is not clear. It's going down. It may not go back up anymore. Do you understand that? Okay, great. Next, this is the recent swing low, right? Recent swing low, which also happens to always be our intended buy price, our entry price, right? The 50 moving average, right? And again, what's the rule? The rule is that the recent swing low must be higher or equal to the previous swing low. So where's the previous swing low? Well, this is the previous swing low, this one, previous swing low. So is it at the same point? Well, yeah, more or less, all right, so that's fine. Okay, so this swing low is fine, but the swing high is not fine because it's making lower highs, okay? We want to get higher highs and higher lows or equal lows, right? So this does not match the entry criteria. So I hope that makes it clear. All right, so let's take a look at some recent examples of this bounce setup going long. So the first one is pound franc, and this setup was on the 29th of November. And again, I begin by looking at the 50-minute candles. So the first thing to ensure, again, a very clear uptrend where the 18 EMA is above the 50 EMA, 50 is above the 200 simple moving average. So if you take a look at the charts, this blue line that you see here, this small blue line, that's the 18 EMA. This is the 50 blue line, and the 200 simple moving average is the red line. So again, just ensure that this blue line is above this blue line, above this red line. You can ignore that first red line because that red line is used, that's a 6 EMA, and that's used in the impulse pullback and impulse pin bar. But I just happen to put in the charts, but we do not look at it as far as this strategy is concerned, okay? Now, so what's happening is we observe the 50 moving average is a support over there, right? Support there and support there. So it's been tested to be a strong support at least once recently, okay? So it goes up and makes a swing high, and it's coming down. So the question is, as it's coming down over here, are we gonna buy right at that 50 moving average? Are we gonna buy at this swing low? So again, let's take a look at the rules. First of all, where's the recent swing high? That's the one, recent swing high. Previous swing high, this one. So is the recent swing high above the previous swing high? Yes, check. So that checks out. Next, the recent swing low, which is the point of entry that we intend to buy, is it above the previous swing low? Right, so is this low above the previous swing low? Yes, it is, right? So that checks out as well. So that tells us it's an uptrend wave pattern. So that's fine. The 50 has been tested before, so that gives us confidence that this 50 will be respected. Okay, so as the price is coming down, I place a buy limit order right at that price, at the 50 EMA, which happens to be 3262. Okay, and I place my stop loss, in this case 19 pips away, at 3243. All right, now you may ask, okay, why 19 pips? Why not why not 8 pips in this case? Well, first of all, notice that this is a pound pair. So for pound pairs, it must be at least 12 pips, right? At least 12 pips. So why didn't I put it 12 pips away? Why 19? Well, very simple, because like I mentioned earlier, I always want to place my stop loss below the previous swing low if I can. If it's close enough and I can stretch and give it a bit more pips to be below that, I'll do that, right? So in this case, if I had used 12 pips, it would be above that previous swing low. Okay, so I made my stop loss slightly further at 19 pips just below this previous swing low, and that's why it is 19 pips. Okay, so this stop loss is 3243. 3262 minus 19 is 3243. So my 1R distance in this case is 19 pips. Okay, so what's my 2R? My profit target must be double my risk, right? So 19 times 2 is 38. So I place my target price 38 pips above my entry price, which is 3262 plus 38, I get 3300. Okay, So is this a valid profit target? Yes, because it is below the recent swing high. So you can see the recent swing high is 3303. So my profit target is 3300. It is below the recent swing high. It is okay. And this is why I have set the trade up in this particular way. Okay. Now, remember, before I actually buy, I have to check my hourly candles, one time frame higher. So from 15-minute candles, I click on H1, hourly candles. Okay. So again, I'm looking at the same pair on the same date at the same time, but at the hourly candle, right? So on the hourly candle, what do I want to see? I want to see that the moving averages are also aligned. In other words, the 18 above the 50, above the 200. Okay, so as you can see, this is the 18 EMA above the 50, above the 200. So H1 is aligned as well. Okay, now when you place your when you draw lines to indicate your entry price, which is this black line here, your profit target price, and your stop loss price, you have these three lines that you draw, right? Now, once you click on H1, these three lines would still be there. Okay, and you can see that on the hourly candles, my stop loss, which is this black line here, is below the 18 EMA on the H1 candles. And you can see that on the H1 candles, the 18 EMA has proven to be a strong support as well. Can you see? It was a strong support here. Support, 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 support. Okay. So because my stop loss is below this support, it also gives me added confidence that it will not hit my stop loss that easily. All right. So notice something interesting. On the 15-minute candles, the 50 EMA was the support. But when you change to the hourly candles, it becomes the 18 EMA, right? And that is the ideal scenario when the 50-minute candles has a support and the hourly candles has a support as well on a different moving average. That is an ideal situation. All right, guys? Okay. So again, my buy limit orders at 3262, my stop loss at 3243, my profit target at 3300. Okay. So once I place my buy order, I wait for the price to go down and to hit my buy order. Now, it may not always hit my buy order. Sometimes it may go down, and before it hits my buy order, it goes back up again. Now, if that happens, I cancel the order. It is not a valid trade. It has to come down and it has to trigger my buy order at the 50 EMA. Okay? So let's see for this particular trade what happened. What was the outcome of the trade? So what happened was indeed the price came down, as you can see, and it hit my buy point at 3262, bought it at 3262, and 1, 2, 3, 4, 5 candles later, it hit my profit target of 3300. So this was a winning trade of 2R win, right? Like any other strategy, remember that you do not win all the time. You can follow all the rules and have the right setup, but it could be a loss, right? Remember, on a trade-by-trade basis, you never know which one will be a winning trade, which one will be a losing trade. And again, our win rate is always 50 to 60%. So remember that in 100 trades, you're going to have about 50 losses and 50 wins on average. As long as when you win 2R, and you lose minus 1R, you will end up profitable. But not every single trade can you predict would be a winning trade. I would love to, but we can't do that, all right? So bear that in mind in terms of the psychology of trading as well. So the next trade example we're going to look at would be Euro USD on the 27th of November. Again, we're looking at the 50-minute candles. That's where we're going to place our entry. So again, do we have a very clear uptrend? Is the 18 above the 50? Is the 50 above the 200? Yes, as you can see, 18, which is the blue line, is above the 50. The 50 is above the 200, which is somewhere below. You can't see it. It's not in the charts, but it's somewhere below. All right? So do we have an uptrend wave pattern? Yes, we do. Recent swing high is higher than the previous swing high. Okay, so higher highs. Now, and we see that the 50 moving average has been tested before. Can you see? Strong test, strong test, strong test. Again, we only need one test, but we've got 3 tests here, so that makes it pretty darn strong, okay? So now what I'm looking at is the price is coming down, coming down, coming down, coming down. Am I confident to buy at the 50 moving average anticipating a bounce? Okay, yes, I'm confident. Why? Because all the rules are met, right? Recent swing high is above the previous swing high. Recent swing low, which is my intended entry price, right at the 50 EMA is above the previous swing low. Okay, and the 50 EMA has been tested to be strong before. So the setup criteria are met, and I get ready to place a buy order right at that 50 EMA. So in this case, the buy order would be at 1925. So again, as I place the buy order, the price is still coming down. It has not reached the buy order yet, right? So it will only trigger the buy order when it touches the 50 EMA. And again, it doesn't always happen. Sometimes when you're waiting for buy order, the price doesn't reach it. It may, reverse and go up. It's not a valid trade, so we cancel the order. Okay, we want it to reach the 50 moving average and trigger the order for us to be in the trade. So again, my buy order is at 1925. Where do I place my stop loss? Again, my stop loss must be at least 8 pips away for non-pound pairs. This is Euro USD. I could put it 8 pips away. So 1925 minus 8 would be 1917. So my stop loss would be at 1917 here. And it so happens that it is below the previous swing low. So like I said, if my stop loss can be below the previous swing low, that is ideal. In this case, it is ideal, right? Fantastic. Now, let me ask you this question. Could I have placed my stop loss 9 pips away instead of 8? Yeah, sure, why not? Could I put it 10 pips away? Yeah, I could, right? Why? Because in this case, for example, my stop loss is 8 pips away, so my profit target must be double, right? So 16 pips. So 1 hour is 8 pips, 2 hours is 16 pips. So my profit target must be 16 pips above my entry price. So it's 1925 plus 16. That gives me 1941, which is somewhere here. And you can see that what my profit target, which is here, is way below the recent swing high. So in other words, I have a lot of buffer. Okay, if I had placed my stop loss, for example, further down, my profit target would be higher, right? But as long as it's within the recent swing high, it is okay. So in this case, yeah, if I place my profit target, if I place my stop loss 10 pips below, right, which would be slightly further down, and my profit target slightly higher, it'd be fine as well because the recent swing high was really high. Okay. Again, the next thing you do is check the hourly candles. So from 15-minute candles, we go to our hourly candles, and also ensure that at the hourly candles, it is on a clear uptrend. Again, the 18 moving average is above the 50, 50 above the 200, clear uptrend. All right. And again, my entry price is here, this line. My stop loss is here, and my profit target is here. And you can see also from the hourly candles, the 18 EMA, which is this blue line, is a support level. Can you see it's been supported, support, all right? And you can see again, my stop loss is below that support level. So that again gives me more confidence. So did this trade work out? Let's take a look. Yes, this trade worked out. So sure enough, you can see the price indeed came down and hit my buy limit order of 1925. In fact, it hit and went even lower, right? So it's not exact, it hit, it went lower. So you may have panicked, oh my God, right? But it came back up again, right? So it came back up again, did not hit the stop loss. Stop loss was at 1917, was pretty safe from the stop loss. And it then rebounded and proceeded to hit our profit target at 1941. Okay, so this is the Euro USD trade on the 27th of November. Now, common question students ask me would be, Adam, you just placed a buy limit order here, right? And you're waiting for the price to come down and to hit that buy order and reverse back up, right? And some students ask me, Adam, why don't you wait for a bullish candlestick pattern to form before entering? Now, you could do that if you wanted to, and I've tested doing that. But I found that oftentimes for 15-minute candle setups, okay, by the time you have got the bullish candle coming up and you enter after that, you'd be entering at a higher price, okay? So I found that by entering right at the 50 moving average, I'm entering right at the lowest price possible, okay? Again, I'm not saying that you cannot wait for a confirmation candle. You can, but I found that by doing that, it does not really improve my win rate very much for this strategy, for the 50-minute candle setup. So I found that I might as well just buy it at that 50 moving average, get in at the lowest price, and that's it, all right? So that's the reason why. And sometimes by the time you got a confirmation candle that tells you it has bounced, by the time the price may have already moved up quite high. So your risk to return ratio may not be as favorable. So again, it depends on individual styles. When I trade stocks using daily candles, I tend to always wait for a confirmation candle, right? But when I trade Forex on the 50-minute candles, I do not wait for confirmation. I just buy right at the moving average. So different styles are used for different assets, whether stocks or Forex, and for different time frames. So it has worked for me, and that's why I'm teaching you my style that works for 50-minute candles. So the next example is on dollar franc. This was on the 7th of December. And again, looking at 50-minute candles, we have a clear uptrend pattern, as you can see. 18 above 50, 50 above 200, right? Clear uptrend. And again, I noticed that the 50 moving average was tested. Can you see that? Boom. We just did one test, and the price goes up, and it's coming down, coming down, coming down, coming down, and it's going to hit the 50. Am I confident to place a buy order there? Yes. Why? Because again, I've got my uptrend wave pattern. That's my recent swing high. Where's my previous swing high? Well, you could argue that, could be this one, previous swing high, or even this one, previous swing high, right? It's like, these are swing highs, right? So recent swing high, higher than the previous swing high, or could be this one as well. Sometimes it's a bit subjective, as you can see. Okay, next, my recent swing low, which is my intended entry price at the 50 moving average, that's my recent swing low, is higher than the previous swing low. So again, higher highs, higher lows, clear uptrend pattern. 50 moving average tested before gives me confidence that it would bounce off the 50 moving average. Okay, so I place my buy order at 9912. Again, when I place my buy order, the price is still coming down. It has not hit my buy order yet. Okay, so I'm hoping it's going to go down to 9912, trigger my buy order, buy, and bounce up. Okay, so again, like I mentioned many times before, it may not always fill my buy order. If the price doesn't reach the 50 EMA, sometimes it may not reach the 50, it may reverse back up. It does not trigger my order, I'll cancel the trade. Okay, so my stop loss in this case, I place it at 9902, 10 pips below the entry price. Again, you could put it at 8 pips if you want, no worries about it. Even 11 or 12 pips away, no worries about it, right? So again, in this case, I use a 10 pip stop loss. Profit target would be double my risk. So 1 hour is 10 pips, 2 hour would be 20 pips. So my entry price, 20 pips above my entry price, which would be 9912 plus 20 is 9932. So that's my profit target over there. My entry is over there. My stop loss is over there. Okay. Now in this case, you can see that my stop loss is not below the previous swing low. Okay. So again, ideally, if it was below the previous swing low, that would be better. Now in hindsight, when I look at the trades, yeah, I should have done that. But when I made this trade, I didn't do it. All right. So sometimes I make mistakes as well, but in this case, looking back, I should have done that. I should have put it below that. Okay? But anyway, it worked out in the end, so no worries about it. So again, always check the hourly candles to confirm alignment. So go to the H1. And again, on the hourly candles, we must see that uptrend pattern as well. 18 above 50, 50 above 200. Clear uptrend. You can't see the 200 here, it's below the chart, but it is above, all right? Our intended entry price is 9912, stop loss at 9902, profit target at 9932. And you can see that, again, on the hourly candles, you can see that the 18 moving average is a support. Can you see? Can you see the support? Can you see the support? Yeah. So my stop loss at 9902 is below the 18 moving average, which is this blue line. So it's a below support. So again, it gives me added confidence that my stop loss will not be hit easily. I will not go down with a fight because I'm protected by the 18 exponential moving average. Okay? So let's see what happened to this trade. So once I placed the order, I waited for the order to be filled. And sure enough, let's take a look. It came down. It triggered my buy order at 9912. It went up, went sideways, went down again, and boom, hit my profit target at 9932. So another winning trade for the bounce setup. Okay, so I hope that with all these examples, you're familiar with what I look at. Look at the 50-minute candles first. Clear uptrend, bouncing off the 50. Check the hourly candles must be aligned. And once I'm confident, I put my entry, stop loss, and profit target. Wait for the entry price to be triggered, and I'm good to go. Right? Entry price not triggered, cancel the order. All right. So let me show you a chart, and you tell me, would you buy at this point? Would you buy at this point over here? So you can see that the 50 moving average has been tested before. Has been tested, right? So are you confident that it's going to bounce up? Are you confident? Okay. Again, is it on an uptrend? Yes, the 18 is above the 50, 50 above the 200, right? So this is the 18 above the 50 above 200, right? So uptrend, we've got test of 50. Are we going to buy there? Are you going to put a buy limit order there? Yes or no? Take a minute, think about it, and let me know, is this a valid setup? Have you thought about it? Okay, good. The answer is it is not a valid setup. No, it is not. Why? Because, again, where is the recent swing high? This one. Right? That's the recent swing high. Recent swing high. Where's the previous swing high? This one. That's the previous swing high. So you can see that in this case, the recent swing high is below the previous swing high, which is a no-no. No-no, right? Remember, the recent swing high must be above the previous swing high. We want to see higher highs. In this case, we are seeing lower highs. Lower highs. That tells us that it's not a clear uptrend anymore, or not a clear uptrend wave pattern anymore, right? Next, where's my recent swing low? This is my recent swing low, right? Where I anticipate a bounce. So this is my swing low. And where's my previous swing low? It is here. So again, you can see that my recent swing low is lower than the previous swing low. Lower lows. My recent swing high is lower than the previous swing high. Lower high. So lower highs, lower lows, not that confident that it's a clear uptrend. So this is not a valid trade. All right, guys? So I do hope you understand it, right? And again, do get ready to watch my live trading videos where I show you how I identify the patterns, how I place the trades live, and they'll give you a better idea. So let's take a look at it right now. All right, so I'm spotting a potential bounce trade here. As you can see, it's a bounce off the 50 moving average. Now, ideally, I would want ideally to get in here, but I missed it because I was doing something else. So now that I'm looking at it, it has really gone up, but now it's retracing back. So I could catch it here before it continues its trend. So notice that the recent high is higher than the previous highs, and the recent low is higher than the previous low. So it's a clear uptrend. I'm going to put my buy order, I'm going to use a buy limit order at 9913 right at the 50 moving average. And I'm going to put my stop loss about 10 pips away at 9903. Why? Because I can easily reach 1:2 risk return ratio. If I'm risking 10 pips, I can make 20 pips before hitting the top of the recent high. So you can see that 20 pips is somewhere over here. So my target price would be somewhere there. All right, so I'm risking 10 to make 20 pips. Now, ideally, when I put my stop loss, I like it to be below the previous low. But in this case, if I put it below the previous low, it's going to be a bit too far away. My 1 hour is going to be a bit too big. So I'm going to compromise and put it 10 pips away. All right. So I use my position sizing form. So I use my position sizing formula to calculate the position size I need. And I'm going to use a buy limit order. So it's going to be a pending order. Buy limit at 9913. Stop loss at 9903. Okay. And my profit target would be 20 pips above the entry price, which would be 9913 plus 20 pips, 9933. Place my order. There we go. So my order is in. The green line is the buy limit price. So if it goes to the green line, you'll get filled. My order get filled. That's my stop loss. That's my profit target. So let's see if it comes down and hits my buy order before going higher. All right. If it doesn't hit my buy order, it keeps going higher, then I would miss this trade, and that's fine because ideally I should have bought it here. But again, like I said, I missed it. And this is to show you in real life trading, you're not always there at the precise moment when it hits the moving average. You may come in late, and this is what happens, right? If you came in on time or early, you could have bought it there, and you would already be in the trade. Right, so after waiting for about an hour, right, you can see the price did retrace, and it has hit our buy order. I actually shifted the buy order up slightly by 1 pip. I shifted my stop loss up by 1 pip and my take profit up slightly by 1 pip because the moving average has moved up slightly from where it was. Okay, so the order was triggered. As you can see, the order was triggered at 9914. My stop loss is 9904, which is 10 pips below the price, and my take profit is 20 pips above the entry price. Right. So let's see what happens. We are in the trade, and we see if it hits the profit target or hits the stop loss for a winning or losing trade. Alright, so it's been a couple of hours later. I just woke up actually because I left the trade running when I was asleep. And that's the great thing about trading, right? Once you put your stop loss and your profit target, just leave it, go do something else, and let it hit one of them. Okay. So now I've woken up, I'm looking at the charts, and you can see that it has hit the profit target. Right? So what happened was, let's do a quick review. So you see this was the initial bounce of the 50 moving average. So we should have entered here. All right. But like I said, by the time I saw the trade, it was a bit late. It really went up here. So what I did was I placed my buy limit order at the 50 moving average, and I waited for it to retrace back. Now it doesn't always retrace back. Sometimes if it just goes all the way up, hits the profit target, the trade is over, and I'll just move on to find another trade. But in this case, I was lucky enough in a sense that the price did come back and it hit my buy limit order at 9914. It went up and it actually almost hit my profit target, and it missed by 1 pip. Okay, and then it came down again, and then went up, came down, and eventually it hit the profit target over there. Okay, so this was a winning trade. So again, after you enter the trade, if you keep looking at it, watching the market, it can be quite frustrating sometimes, right? Because it goes up, almost hits the profit target, you say, yes, I'm out, and it comes down, oh shit, goes up, comes down. So the best thing to do is don't look at it, right? Just let it do what it's supposed to do, and once it hits the profit target or stop loss, move on to the next trade. All right, so this is the bounce trade with dollar franc. All right, I'm spotting a potential bounce trade on euro yen. So I'm looking at the 15-minute candles right now. And as you can see, the 50 moving average was tested recently. And now it's kind of like bouncing off the 50 moving average. So the recent high is higher than the previous high. And the recent low is at the previous low. In fact, this could act as a potential support level. So I'm going to do a potential buy right now. Okay, and I could buy currently at this price. So I could put a buy order, a limit buy order somewhere around right below there, 135.37. Stop loss 8 pips below 135.29. Okay, and my profit target could be double of that. So let me just so you can use your position sizing calculator. You can put in your risk, you can put in the number of pips, and calculate your position size on this. Let's see what's this euro yen. So I'm going to go to euro yen. Okay, so I'm going to trade 1.47 lots, 147,000 of the currency, 1.47 lots. Okay, so I could put a buy order. Let's see, 1.47. Hold on a second, let me just take a look again. Again, the buy order, we could place the buy order actually right at that 50 moving average, right? That's fine. So let's put it somewhere there. 135.4. Let's say put 135.4. $135.4 and stop loss 8 pips below, so 135.40 minus 8 pips will be 135.32. 135.32, and profit target would be 2R, so it's 16 pips above 135.40. 135.56. 135.56. Okay. Okay, so buy order in. Let's see, have we been filled on the trade? Okay, so we are not filled yet because our buy order is at 135.40. Currently it's at 135.409. So it's got to come down slightly to below our buy limit order to be triggered. So once we are triggered, we are anticipating a bounce back up there to 135.56. Our stop loss is at 135.32, which is over here. This is our stop loss, our entry, and our profit target. Okay, so notice that we are risking 1R to make 2R over there. Okay, and one of the things that you need to check as well, I actually checked it before, so let me just show it to you right now. Is you got to check the hourly candles as well. Always remember check hourly. So notice on the hourly candles, it must also be on a clear uptrend. Okay, where the 18 is above the 50 moving average and the 50 is above the 200 moving average. So on the hourly candles, it's a clear uptrend, and on the 50-minute candles, it's also on a clear uptrend, as you can see, right? 18 above 50, 50 above 200. So it must all be aligned on the 50-minute and hourly candles. So again, we need so as you can see, it's finding support at the 50, right? As we anticipated, the 50x is a strong support. We want the price to come down to fill at the green level, to fill at 13540, and anticipate you'll bounce back up. And notice our profit target again is below the recent high, right? It's going to be below the recent high. Okay. So let's see if this turns out to be a winning trade. All right. So as you can see, we have been filled on the trade. Let me go to View, Terminal, and go to Trade. Okay. So we bought 1.47 lots of Euro Yen at 135.4. And you can see this is our current profit, $64. Okay, we bought it at this green line. We got filled here. So now we are, looks like we're on the way up. And hopefully we can hit our profit target over here. Our stop loss is over there to protect us. Okay. So again, once I place a trade, I like to just close my eyes, do something else, and just wait for it to hit profit target or stop loss. I don't like to look at it because you get emotional when you look at it. So it's best once you're in the trade to ignore it, do something else, and look at other pairs. Let's see what happens to this one. All right, so I'm checking in on the trade. It's been about, let's see, 1 hour since we entered the trade. And you can see that it's going up very nicely. It's going to hit my profit target very soon. That's my current profit, as you can see. But again, the profit you make is not important. What's important is following the rules consistently and achieving the R multiple, right? So you risk 1 hour to make 1.5 and 2 hours. That's what's important, right? So great. So you can see it's almost hitting my profit target, right? Very nicely. The profit's going up. And so this is how I entered the bounce trade.